Watching Trading Day, I'm Amber Kanwar. One of our trending trades is Boeing. The stock is up today after the CEO announced that he will be leaving at the end of this year. The company, of course, has been under intense pressure since January of this year when a brand new Alaska Airlines 737 MAX door panel blew off mid-air. 2 weeks ago, the U.S. Justice Department also opened a criminal investigation into the incident. Let's welcome Stuart Glickman, an analyst at CFRA, who believes the company faces two major issues and still maintains a sell rating on the stock. Stuart, thank you so much for joining us. We are seeing a bounce in the stock. It's very small. It's only up about 1%. But is that representative of hope that new leadership can right the, not right the ship, but right the plane?
Hi, Amber. Thanks for having me. So, yeah, I think that there is some positive sentiment today on the hope that this is the beginning of the next version of Boeing that will right the ship, so to speak, and get the quality defects behind them. But I think it's going to be a long process, and I'm not optimistic about Boeing's near-term earnings prospects for 2024 or 2025.
Why not? Walk us through how you're thinking about this.
So I think part of the problem that Boeing faces is that not every decision they make is fully under their control. The FAA is limiting how many 737 MAXs can go out the door to a limit of 38 per month. At the moment, they're not even producing that. It's been about 27 per month in January and February. But they do have guidance out there that they would aim to get to 50 units per month by the 2025-2026 timeframe. The free cash flow guidance of about 10 billion in and around that timeframe is still out there. I think both of those targets are going to be hard to hit, because I think the FAA is really going to scrutinize them quite closely to make sure that when a plane does leave the production lines in the state of Washington, that they're built the way they're supposed to be with proper documentation. And there's simply, I don't think there's any way to speed that process up. So I think that near term, there's going to be a lot of eyes on Boeing, and longer term, they can probably get to those kinds of targets, but I don't think they're happening in the next couple of years.
Regulators are one constituency to satisfy, but increasingly, it's very clear that the customers are also quite upset. They're also taking a financial hit. And according to reporting, they likely played a role in this decision, growing disenchanted with the CEO. I mean, how hard is it to win that business back, given that there really are only two choices out there?
Right. So if you want to be a bull on Boeing, you can point out that this is a duopoly. It's really a two-name game for the big the big narrow body market. And Airbus does have a bit of a lead on Boeing, but obviously Boeing is the clear number two. That was also true 10 years ago. When Boeing had the advantage in market share. Now Airbus does. It's not like Airbus is sitting around with a ton of extra capacity that they can throw more capital at those lines to get more units out the door than they're already doing. But I think when it comes to orders for down the road, I think some of those customers may be thinking twice about hitching their wagons to Boeing to the same degree that they have in the past. So I do think there's a risk that unless Boeing rights the ship fairly quickly, this might not manifest tomorrow, but in, say, 10 years, 15 years, you may see that market share gap begin to widen.
Does making things right include bringing Spirit Aerosystems back in-house?
Yeah, I don't believe that bringing Spirit in-house today or even next month is going to do much to resolve the problems. I think that's a bit of a head fake. That I think there's an implicit argument there that if somehow Boeing can take its manufacturing prowess and bring it to bear at Spirit, that elimination of the problems at Spirit would resolve all their problems. I think there are problems in both enterprises, and Boeing has its hands full already simply cleaning up the problems it faces in-house. I don't think adding a degree of difficulty to this helps their case. So I would argue that it's something they could do longer term, But I don't think that right now is the best time for that kind of combination.
How much of is the position that Boeing is in right now compared to where it was 5 years ago when there were those two fatal crashes that ultimately saw Calhoun come in and try and fix from that mess? Ultimately, if shareholders are looking at that seemed like a way worse situation. And Boeing was able to recover. Now, because of the issues that they're facing and post-pandemic, they're still well below what they used to be. But if they were able to come through that, again, to use your words about if you want to be a bull on the stock, couldn't you use that as an argument to be bullish?
Right. So different crisis, same company, more or less same leadership, because Dave Calhoun was internal at Boeing at the time when Dennis Muhlenberg left the firm. 2018, 2019, a software problem, call it a white collar defects with the software code. 2024, Alaska Air 1282, more blue collar problems, defects in the manufacturing process. I would argue that the latest crisis is, relatively speaking, better for Boeing because nobody died in this incident, miraculously, when the plug blew off the fuselage at 14,000 feet. Could have been a very different story if that had blown off 5 minutes later at 26,000 feet. So, yes, it's a better situation, relatively speaking. But I think the commonality or the common thread that runs between both crises is a relative prioritization of speed to market over quality. And I think that's what really has to change, and be willing to accept that the planes are not going to be leaving the production line at the same pace that they were before. And when you think about how Boeing stock is trading in the market, the earnings expectations for 2025 are starting to come down now, but the multiple that's being applied to that earnings power, if you will, is still very much in keeping with what the multiple has been like for the last 3-4 years. If you go back 10 years, over that last 10-year period, the historical forward average is more like 25 times. And we're trading right now based on 2025 expectations, more like 36 times. So I don't think that investors today are really philosophically thinking about how much one should value Boeing in a slowdown environment. I think they're being treated as if this is just a bump in the road, and once we get past this, it's all systems go. And my point is that it may be a while before all systems are go again.
And that was going to be my final question. You don't sound like somebody who's just waiting for one or two things to happen before you upgrade and see it as a buy. You see cultural problems there. You basically see the way the company operates needs to change. And that's part of a narrative that is emerging, that over the last decade or so, even more, the company has switched to maybe prioritizing better financial metrics over quality, shifting their engineers, for example, from Seattle. So if somebody's going to come in, which is the right thing to do, reemphasize quality, that might actually be a difficult pill for investors to swallow because, to your point, it's going to lead to reduced output, maybe even reduced earnings power.
Yeah, I think that investors should probably get accustomed to the idea that margins may not be as strong as they have been in the last 5 years, aside from when we had the groundings of the 737 MAX before. So I think kind of right sizing margin expectations would be step one. And I think that there's a cultural issue, obviously, that I think Boeing needs to work out with the help of the board of directors to get new management in place that's going to take a much harder look at quality and engineering. And then I think longer term, you have an innovation race that Boeing needs to continue to invest in. It's been a long time since Boeing introduced a completely brand new plane. The 737 MAX is based on the original 737 that came out in the late 1960s. So I think it's going to be a long process for Boeing. To be fair, there are secular growth drivers. There's an awful lot of planes that are going to get retired between now and say 2043. That's their 20-year outlook calls for an awful lot of retirements. They are number 2 in a duopoly. So if they can get things back in order, they have a lot of tailwinds behind them, no pun intended. But they have to right the ship first.
In the U.S., we are watching a story in Baltimore where the collapse of a key bridge, which was hit by a container ship, has now created some big questions around trade and travel, especially with the Easter weekend coming. And on the trade front, what's interesting about this bridge is that it allows commercial ships to enter the port of Baltimore. It is the 9th largest U.S. port, one of the top ports in terms of volume and value of cargoes. Last year, it handled more than 50 million tons, valued at more than $80 billion US. So the bridge closure is something being watched closely as a possible disruption for other related businesses, warehouses and facilities that are located in an industrial park on the north end of the bridge. A lot of companies, usual suspects in shipping like Amazon and FedEx and that have to be mindful of that. It's also worth noting the Canadian Pension Plan, CPP, bought Ports America in 2021. One of their assets is the Port of Baltimore. And there are a number of U.S. stocks that are getting some attention today because of the bridge collapse. Jeff Morgan from Bloomberg has been watching those names and joins us now with more detail. Jeff, which companies specifically are being impacted here?
Yeah, good morning. One of the most immediate companies to be impacted is called CONSOL Energy. They are a coal miner and coal exporter, and they have 2 export facilities in the Port of Baltimore. The stock is down as much as 9.6% today. And if you look at the bridge, to describe this as a bridge that was hit by a container ship, that's accurate. But if you look at where it is situated, this is kind of the outermost bridge, kind of framing the harbor, framing the Port of Baltimore. So everything sort of within the bridge, which is, looks like the entirety of the port, is backed up. And until it's cleared, so companies like CONSOL Energy are going to have a difficult time moving their coal and may need to look to other ports to do that. So that is kind of the biggest and the sharpest move so far, but it's not the only one. CONSOL Energy's coal export facilities there are served by CSX Transportation, the big railway firm, as well as Norfolk Southern and UNP. They all 3 of the railway companies. Bloomberg Intelligence has some information out that is projecting that there could be a bit of a backup in bringing logistically bringing things into this port for export from here. And so some of that may need to be rerouted to other ports, including on the West Coast. So the stocks that we're watching so far today are, of course, CONSOL Energy, CSX, Norfolk Southern, but also Kinder Morgan has a transloading facility in Baltimore, moving some energy products there. This is a major port for moving automobiles. So we're watching the car stocks. We're watching Caterpillar. We're watching John Deere, and some of the other, transportation or, tractors, industrial type stocks as well. So, the biggest one though so far is this CONSOL Energy, which has had the sharpest move so far this morning.
Meanwhile, the appetite for new listings, IPOs in this country, is at its weakest in 30 years by some measure. There's not been an initial public offering on the TSX in over 1 year. To talk about all of this, we're joined by an expert, of course, in this field, Bruce Croxton, co-founder of Round 13 Capital. Thank you, as always, for coming in.
Yeah, hi,
So,
Howard.
a pretty interesting acknowledgement by the CEO of Lightspeed that he would consider a takeout by a private buyer. Neither Nuvei nor Lightspeed have been winners on the stock market. What would it mean if both those companies were to leave the public market? What would he be telling us about investors' appetite for tech stocks and risk?
Well, it means what it always means, that Canada's last on the list, right, for any type of recovery or talk of recovery. And companies like Lightspeed are in a tricky spot. You know, there was a lot of companies during the hype when the multiples were off the charts that went public that probably shouldn't have in terms of their size and growth prospects. I wouldn't put Lightspeed in that camp at all. I think they're like solid company. Always been a fan of the company, and Dax is a founder leader. I'm glad to see him back in. But you're right, the market hasn't loved them because right now the rose is way off the bloom for mid-cap Canadian technology companies. So he's in a tricky spot because he's got to be thinking the company doesn't love me, or the market doesn't love me as much as they should. Would I be able to do what I'm able to do without the scrutiny and the expense of being public? On the other hand, we're starting to see glimmers, right, of what might come back, you know, with Reddit going public in the States and supposedly a long list of tech companies lining up behind them, depending on how Reddit does, and Reddit's doing quite well.
Right.
Now, fast growing, profitable, so it's the benchmark is high, so how long will it take to filter down to the good, but maybe not in the same category, Canadian companies is got to be what Dax is, you know, representing on behalf of his shareholders. Do I hang in for it to flow down to the Canadian market, or is there better, shorter-term alternatives that I should pursue? And it sounds like at the end of the clip, he's saying, "Hey, I think I'm in the right spot." So that's telling me that he's got some optimism that the hype happening south of the border may actually spread to companies that are up here.
How would you characterize the U.S. IPO market, which has been defined recently by the Reddit IPO?
Well, I would say hopeful, right? But it's the beginning of that hope, and there's still a lot of unanswered questions, as you guys discuss every day. You know, are the interest rates coming down? Is inflation under control? You know, ironically, the other high-flying stock is Trump's social media.
I was going to ask about that. Do you consider that a tech stock?
No, it's not worth a lot. Well, yes, but it's not worth a long story because, like, the metrics don't in any way justify that what the performance that it's pulled off recently. So you still have to separate the wheat from the chaff. I guess it's hopeful that you can still pull off a scam and get some runs on something that doesn't deserve it, because that was happening when private tech multiples were in the 20, 25 times revenue range. You had a lot of Canadian tech companies that went public that really shouldn't have, that are now floundering with, you know, clearly for sure undervalued, sometimes valued less than the cash they have on their balance sheet type situations, that the market is finally turning their attention to and saying, hey, you know what, there's some value here. And you're seeing even those stocks in Canada now starting to get a little bit of traction. So that to me goes under the title of hope. It's hopeful, and there's some signs that we're off the bottom. Would not be in any way saying that we're going to get a rash of highly successful tech IPOs just yet, and certainly not ones where the growth and profit profiles are under debate. I think Reddit was liked, although it's off today, because it had both of those things. Fast grower, which you like to see in a tech stock, and they've turned their eye to turning it into a bottom line. Partially, I might add, we got to mention it at least, due to some of the AI strategy that they've started to employ, which when they're licensing out access to their users' data, that's licensing revenue that goes straight to the bottom line, which EBITDA people love, right?
Reddit didn't go public easily, however. There was a 2-year period of false starts and pullbacks. What's it telling us that now was the time that the market has so embraced Reddit?
Well, I think it's telling us that the last 2 years were definitely not the time, right? You saw nothing happen last year in the U.S. market. Nothing for sure, if it doesn't happen in the U.S., is not going to happen in Canada. So I think, you know, what we're seeing now is that finally there's a lot of pent-up demand. Like, I mean, people are anxious to get behind some of these stocks. There is liquidity on the sidelines that's been very patient over the last couple of years. Certainly, I can speak to the private market for sure, not so much the public side. But, you know, and those are retail investors, right, that are looking to get the next cycle started. So, you know, I think the next 2 quarters are going to be very interesting to see what we can get off the ground here and whether that trend will trickle into Canada. We always lag, as you know.
What investors who have wanted exposure to technology over the past couple of years have invested in the big stocks that we're so familiar with. Do you see that changing? You seem to be saying that there's a possibility here that investors looking for exposure to tech will broaden out to smaller companies.
Yeah, I'd like to think so. And don't forget, there's all of us little guys, the VCs with dry capital that have been also sitting very patiently looking to back the next private companies that one day may end up as your next Shopify. So I think there is a lot of pent-up demand, and you have to mention what you just said, like the bulk of the growth has been off the big 7, and that has driven actually most of the market as well outside of tech. So, there's a lot of people that are waiting to see whether, the rally can continue beyond those 7 or 8 stocks.
You've told us in the past that Canada has all kinds of potential and all kinds of very high-level talent here in the privately held tech space. Does that still apply?
It does. We're still turning out the best engineers in the world, in my humble opinion. So far, the government has continued to play ball with not taking a big tax bite out of angel investors. I hope we don't have to go back to visit that, which we did 3 years ago when they were looking to really tax private holdcos, which is sort of the lifeblood of getting companies off the ground and going. And they have been very supportive of funds and SHRED programs. So I think we're still in a very good place.
Let's bring in Carter Braxton Worth. He's the CEO and founder of Worth Charting for his technical analysis. Carter, thank you so much for joining us. I'd like to begin, if we can, with the TSX, because we haven't had as many all-time highs as the S&P 500, and that momentum has just got started. We're poised to end with a third all-time high. Just, from a practical perspective, the way you look at it, what does it mean when you get an index, a stock that hits all-time highs after, a bit of a drought?
Sure, and that's the key word, a bit of a drought, right? Because if you're just in a steady uptrend, north by northeast, going in a sort of up and to the right, every day you're making new highs, there's no reference point. The key is there was a drought, and right now we are literally at the same level we were in April of 2022. In fact, the high was 22213. That was the 5th of April, and we are literally to the penny at that level right now. And so the sequencing typically, and while this doesn't have to always be the case, it is typical that before you exceed a former high, you contend with it. And so we've just now returned to those highs in the TSX of April 2022, and here we are, April essentially of 2024, and the probabilities are high that we back and fill, contend with it before exceeding it and really breaking out. Because essentially we're at the exact same level we were 2 years later. We have not broken out yet on the TSX.
I think that's good perspective, that we're at a test point. We haven't yet seen a breakout. And I'm wondering if you look at some of the underlying commodities that drive our index, oil, gold, does that give us a sense of where a source of a breakout could come from?
Well, that's right. Obviously, big banks are a dominant part of the index, of course, and that's important, as well as a railroad or two. Tech is virtually non-existent, and so forth and so on. And so the makeup of an aggregation index is very important. But you did mention in gold, and gold acts very well. Gold miners, on the other hand, of course, do not. And I think that's going to be one of the stealth winners and alpha generators of 2024, that miners and the spread between the bullion and miners is so wide that one is right to do sort of what is unpopular here, take the road less traveled, and to embrace gold miners for a catch-up trade, not only to equities in general, but to the underlying commodity gold.
That's interesting, because you're absolutely right. Those gold miners have lagged. So you're calling for that, I guess, disconnect to be resolved on the upside by the miners.
Yes, and it doesn't have to catch up with gold; just has to do a little bit of. I mean, they've been so in the mud. That's what spinning one's tires looks like. And at some point, and you're seeing it now with energy stocks, which have lagged, coming to life a bit here. And energy is a big component within TSX. And so you see, even in the big U.S. names, Chevron and Exxon, and so forth, starting to really perk up with oil back above 80.
Okay, so let's compare this now to south of the border. S&P has had many all-time highs. Tech has been a driver, but not the only one, right? We're seeing a broadening out. What does that tell you?
Right. In fact, there are a handful of industrial names, material name, housing names that are outperforming the biggest techs, whether it is an Amazon, an Apple, a Google, and so forth. And so there is more contributors to the move. At issue for the U.S. market, of course, is, again, sequencing. When you go on a fairly steep, uncorrected intermediate advance, it's not a 2-week advance, not a 4-week advance. We're now almost 6 months since that October low, up almost 30%. Normal sequencing, if you're an uptrend, is to have a counter trend. That means down. Just as when you're in a downtrend and you're plunging and plunging, you have these violent counter trends, which is up. And so at this point, we've gone almost 6 months without so much as a 3% drawdown. Fairly rare. Momentum's a powerful force, but all things that get steep and uncorrected do ultimately have, and you can choose your word, the nomenclature is irrelevant. Corrections, dips, drawdowns, sell-offs, plunges, drops, declines, it doesn't matter. They have counter-trend moves.
Or mean reversion, that puts a little bit of a, it sounds gentler. But what could the magnitude of a mean reversion or plunge be in your books? What would be normal?
Sure, so we can rely on history to some extent. Again, since October, we haven't anything more than a 2.5–3% drawdown. If you look at all 5% plus sell-offs in the S&P going back to the 1920s, the median ends up being about 8% and the average about 9.5%, which is to say that once you go down 5, whether it's because people have stop losses actually entered there, risk managers walk into the room and say, you got to cut the position in half. Going down 1 or 2 is noise. Stocks do that every day. But once you get down 5, typically it triggers more. So I would think something in the order of 8 to 9, 8 to 10, 8 to 11 is what would be normative.
I wonder if the trading action in March gave us a hint of what that might look like, because tech in March underperformed while energy, materials, utilities, financials all did pretty well for the month of March. So, I mean, they call that a rotation maybe, but does it speak to, is tech getting vulnerable?
Well, a certain tech, Microsoft is making new highs. It's the biggest tech of all just 2 days ago, whereas Apple's been struggling. Apple's relative performance to its sector is at 2-year lows. So it's case by case. But to your general point, I think that we're seeing other areas of the market sort of join the fray, as the expression goes, and so that does help the market. But at the very same time, you have stocks, again, that are sleepy stocks like Caterpillar that are up 60%, double the S&P.
What would you do with that one?
I'd sell it all.
Why?
Well, so we can use the word steep and uncorrected, or you could talk about the fundamentals. You know, there's some 40 analysts that cover it. Think about that. That's men and women who have CFAs and CPAs and MBAs, and they're not just fooling around. They work at big banks and brokerage firms, as I have in my life, and they're responsible for getting it right. And collectively, this group believes the stock is worth less 12 months hence than it is now. Well, are they just making that up, or they must be coming to that judgment based on something? You can go with what they think, or you can go with what I think. I think you sell it. It's steep, uncorrected, overbought, overloved, overowned.